The much anticipated jobs report is coming out today. Trader Michelle Schneider, the chief market strategist at Market Gauge, is here with her stock market tips. Good to see you, Mish.
Well, number one is we're seeing a pattern here where we have ECB lowering interest rates this week, while we have a Fed that has been on a stay put and seeing contraction in certain numbers. Obviously, labor is something to keep an eye on. Number two is, even though we haven't seen any statement about lowering interest rates, we do see yields falling in anticipation of that. And number three is we're starting to see a little bit more of an emergence of that stagflation environment where we might see at least a contraction in the U.S. economy, not necessarily recession, but we're seeing the price of goods continue to rise. And all of these things have been not as great an impact as one would think to the market, but could certainly emerge as we go forward if that continues to be the pattern.
What do you think about the tech trade? The NASDAQ is up about 8% in the past month as investors jump back into hot stocks.
Well, I know that's what everybody loves to talk about. And what's so interesting to me is that, yeah, certainly that has led generally this rally that we saw from the April lows. If we just take NVIDIA, for example, that getting up to 140, 143, I think had been the recent highs, is impressive. And we all know it's the future. But the question is can it sustain if the cost of running that AI and the data centers, and this is what I'm looking at, continues to be really exponential? We know that Meta, for example, is making a deal with nuclear energy, but we're still several years out on that. So I don't know if I'd be chasing it up here, but I certainly know that dip buying is probably smart as well. Control the risk.
Thank you, Mish.
Thank you so much for having me.